Et tu, Bere? Beware the Ides of March. The bears attempt to break support, but was it enough? This is Invest with Jacob. Okay, guys, so today is March 15th, otherwise known as the Ides of March, where Julius Caesar was famously assassinated by a group of conspirators, including his longtime friend Brutus. And yesterday, the bears attempted an attack on the bulls and broke some support, but was it enough? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, we had 2 trades yesterday, one quick loser and one really good winner. Had a nice winning day again. If you want to be part of this winning team, you're really missing out if you're not. Check out later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And today, the bears tried to take it down and break through. They actually did break through some support here, breaking through the trend line. They were unable to completely follow through to the downside or even close it below the trend line, which would have been much stronger. But they did break the trend line, and then the bulls rescued it at the close to close it back above the trend line. So that is at least a little bit of a warning. And I know on this channel we concentrate on the S&P and the NASDAQ, but in my room I talk about other stocks as well that influence the market. If you look at the RTY, it has rolled over and it is in trouble. Apple is in a little bit of trouble. The SMH, the semiconductor ETF, is in a little bit of trouble. There are lots of factors adding up to the market weakening, and as soon as support breaks fully, I do expect to see accelerated selling. But as I say in every video, so that we don't get this confused, above the blue box, we are bullish, and we are still looking higher. So where exactly are we at in the count then? As of right now, we would count this high here from last Friday as the wave 3 high. We would count the pullback into Monday as wave 4. And then remember, we're in a diagonal, so each of these waves is an ABC. That's how they count in a diagonal. So you'd have your A of 5, B of 5, and then you'd look for C of 5 up into that 5350 to 5400 area. Now, there are a few problems with this count. Number one, it's a diagonal, and diagonals rarely play out. We are at the end of this diagonal, so it could be that the diagonal is already played out. This can be wave 5 right here. The top can be in, but they still need to break the blue box to give us confirmation on that. The other issue is you can have throw under on the chart. Usually it's on wave 4. Throw under is where you go below the trend line and come back above it. So you wouldn't necessarily expect that here. So it's a little bit of an oddity. It doesn't invalidate the count or the diagonal, but it is a little bit of an oddity to break down under the trend line here. So a little bit of weakness from the bulls, but that doesn't mean they can't continue into that 5350 to 5400 area. And as long as we are above the blue box, the bulls get the benefit of the doubt on any count. So that is the primary count as we are looking for the bulls higher. Now, if the bears are able to follow through after yesterday's takedown, we would count this move off of this high here from last Friday. This would be wave 5 to complete the diagonal. Then you would have an A wave down, a B wave up, and this would be 1 of C, and the bounce is 2 of C. And then you'd start 3 of C down that should break through the blue box. And then a 4 and 5 to complete the A, B, C off the top. And then we would have a bigger correction on our hands from there. That would just be the start to get us through support and tell us that we have some kind of top in place. So the bears have a lot of work to do. They did good today. They broke a little bit of support, which is new to them. And if they can continue to do that and follow through, that's what we would look for, is a strong, sharp move down through the blue box. We can see selling accelerate all the way down toward the Fed lows, which were all the way back at the end of January at 49.30. Over on the NASDAQ has a little bit different of a formation. It is certainly not the most bullish structure you've ever seen. It is overlapping in a lot of areas. This bounce has been very weak off of this low back here from Monday. This bounce up was weaker than the ES bounce. The pullback was deeper. And so overall, the NASDAQ is displaying weakness more than the ES is. They did poke through this trend line here of these lows, these higher lows they've been making. So we did poke through that trend line, but they bounced back above and closed it above. So the bulls saved the day again on that one. And again, as long as we're above this blue box, we are bullish. So we would be looking for C of 5 to complete the bigger diagonal here, where you have A and B in place, and you're looking for this C wave up toward the 18,814 to 18,855 area, as low as 18,724 for a slightly higher high, but I would expect them to hit this 18,855 area if they do come up and make a new high. That would be the primary target for the move up. So if the NASDAQ can hold support and rally and break back above this A wave high, at that point we can start to look back towards all-time highs at the 18,775 to 18,855 area to complete that diagonal to the upside, and then we would look for the start of a turn down from there. So NASDAQ has not been as impressive. The last few days it has been a lot weaker. They are down here closer to the blue box than ES is. They are one bad day away from breaking through that. So the NASDAQ is kind of up against it and does need to hold support, including yesterday's low as a fairly key number. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, become part of the trading team, make sure the trades are for you, that the style's for you, that you like PT and I. Become part of it before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking it out. We also have our training material that's helping people understand the market. We're just about done with our advanced course here. You can see we have our introduction, our advanced fib levels, diagonals, double and triple threes, flats, triangles, trading Elliott Wave, all kinds of complex patterns when the market gets haywire so that you can understand what's going on and trade off of that. As you can see on the screen, our members are really loving it, and it's helping them really understand a complex market. If this is too much or you're just getting into Elliott Wave, check out our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be very difficult when good news makes the market go down and bad news makes the market go up because the news patterns don't matter. And Elliot knew that a long time ago. He knew that key levels mattered and what happened when those key levels held and what happened when they broke. And this gives you a huge advantage over the rest of the market. The course itself is 25 videos where we go over the introduction to Elliott Wave Theory. So we give your expectations, your mindset, the KISS method, and why this works. We go through all the chart setup and tools, every tool you need to use along with Elliott Wave Theory and how to use it. We do the Elliott Wave for Beginners area. I go through each of the waves, how to measure them, how to understand them, what happens when they work, what happens when they fail, the key levels and how to find them so that you can make sense of an irrational market. The really cool thing, guys, if you don't want to pay for that course, you get it for free in either of the monthly rooms, as well as the advanced course. Any training material we release is given to our members for free. In our first room, the Invest with Jacob room, you get all of our real-time market updates, all of our buy and sell alerts, all of your questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as all of the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room, but if you're looking for futures trading, individual stocks, advanced training, and income trading, you need to check out PT's throne room. In there, you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, PT's income method that's crushing it, and his reduced risk binary method that absolutely kills the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures those trades. It's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, the key takeaways for today. Rule number 1, above the blue box, we are bullish. Rule number 2, the bears need to follow through. If they can follow through below these lows and get down to the blue box, then we can change the tenor of the market. However, as long as we're above this blue box, the bulls are in control, and we would look for a continuation pattern up to the 5350 to 5400 level in this C wave. Over on the NASDAQ, same rules apply. Above this blue box, we are bullish and should be treated as such. However, if the bears are able to break down below that blue box, our tone in the market changes, and we would look for accelerated selling. We are looking for completion of this C wave to the upside toward the 18,814 or 18,855 area if they continue to the upside. Guys, it's the weekend. Grab yourself a drink, get out of the house, enjoy your family, do something fun, and I will talk to you next week.